You've seen great retail numbers over the last couple of weeks through earnings season. Home Depot earlier this week had comp store sales up 8.1% in the U.S. What was important there was the CFO had mentioned that home equity values are up to $73,000 per homeowner, up 120% since 2011. So, consumers that own assets, that have homes and so forth, they're feeling pretty good about it. The tax cuts have been helping. You see people talking about spending the tax cut. The higher fuel prices haven't seemed to derail that. And yeah, just across the board, it's been an excellent growth, well above what these companies were expecting for this quarter.
Let's talk about ideas. We love to have Idea Friday here on Worldwide Exchange. Get some stock picks out there. I know that you've been on the TJ Maxx, the TJX train for a while. This was a $50 stock 5 years ago, $90+ stock. They've just knocked it out of the park. How much more do you think a TJX realistically, or a Ross, R-O-S-T, realistically has to go, Brian?
They got a lot of growth left. The off-price channel is very unique. It's a probably less than 20% of the overall department store channel, if you will. And when you look at the business model for an off-price retailer, it's extremely difficult for Macy's to also run an off-price. They're just different competencies. And so what we really like about TJX and Ross is it's going to be very difficult for the other companies to go into off-price and compete with them very well. And that's what we've seen. And so, what you have with TJX is you have the international aspect of it, and what you have with Ross is they don't have as much presence in the Midwest and the Northeast part of the U.S., so they're both positioned in different ways to continue growing, and the consumer's always looking for value. And so what we see is, really good growth in the off-price channel. We like TJX and Ross.